Hello, welcome back to another tutorial. On a recent tutorial video, I explained the head and shoulder and inverse head and shoulder pattern and indicated it's one of my favorite tools to use. Whenever I see it, I do use it often. And if you go on the internet or watch other YouTubers or other videos on YouTube, you will hear many other patterns that people refer to often, like fallen wedges, cup and handle, rising wedges, all that stuff, right? And for the most part, I'm going to try to illustrate to you why I don't discuss or mention the wedges very often, because oftentimes it is seen by other um, patterns on the same chart as far as other technical analysis tool. A lot of time, as you get more comfortable and knowledgeable with TA, you find that there is a lot of confluences of pattern that work within each other, and eventually you kind of rely on certain one. Some people have preferences, no doubt, right? I have my own preferences. I'm not saying what works for me is something that works for everybody else. I just want to illustrate to you why I use some patterns much more than others. The bottom line and the main point to this video is to show you how and why I don't use or don't mention often the wedges. Okay, so let's talk about the rising wedges and falling wedges. And here is a clean chart of Rocket Pharma, a stock that we recently had some interest in going long. Okay, so if you just look at the chart, do you see some very clear pattern developing? I say yes, yeah. I'm sure you can see some stuff that look quite obvious, but let's go with the wedges. Okay, let's go with the wedges. Let's go first with a rising wedge. Do you see one? I'm sure there's a couple, but let's go with just the most obvious one. Or let's go with a falling wedge first, and then rising wedge next. A falling wedge have lower high and lower low, like here, see? Lower high, lower low. So if you want to draw a falling wedge, you can do something like this, right? And then you can draw what depend on where. See, now let's do this. Let's back up the time frame. I did not go beyond 1 year, so let's do 2 years to see. Okay, next wedge, you can go right here. This is a 2-year chart. Okay, so you can see this falling wedge is here, and when there is a breakout, there you go, it run, right? So for those that follow the falling wedge pattern, certainly this breakout right here would be an interesting point to focus on, right? So for some trader, they see this breakout, they say, oh, we can have a breakout here on a falling wedge. And as usual, you want to see a check back to a breakout, right? So you get this check back and then go. Good thing, right? And now do you see a rising wedge? Right? Now, how far does it go? Some people would say that the spot is at the high right here. See that? Some people would measure the wedge distance like this and put it here on the breakout spot. And it's not a surprise, all right, that I'm just gonna waste time drawing, but you can see it top out where the distance is between the bottom of the wedge and the top of the wedge, right? It's not random, but you can also say that it used the reference high here because it wick up there, as you can see that, and it reversed, and then it tried to break through, and then it gave back, right? So that's a fall. So now, but on this move up, you can regard this as the rising wedge, because you have higher high, higher low, right? So if you were to draw a wedge, you can do this. Okay. Trying to move on real quick. Okay, so there you go, right? You can see this wedge. So if for some trader, if you came in this game after this point here and you start to buy into this, sure enough, you should have a stop right here as a trigger to take your profit, because it fall out. So a falling wedge have an upside breakout. A rising wedge have a breakdown, downside breakdown. Okay, so no wonder it break that and it go down. And then you have the same thing, another wedge, another wedge. Okay, so I'm not going to repeat it, but look at where it bottomed out. Okay, once again, it's very clear where it bottomed out, right? So let me show you where things start to look interesting. So for me, there's a reason why I talk about channel as a reminder, review. A channel can be a sideways channel or a upward channel or a downward channel, right? I have shown that in previous video as far as channel. So this is a sideways channel. Why can't I get this one right? There you go. You see that? And of course, let's go back 3 years to see if it's any reference. Once again, as you can see, whatever we see here is not random. As far as the top of the channel and the bottom of the channel, it kind of play into, see right here, there is a spot of what you call it, support on the previous breakdown. There is a pause here for a month or so, and then the breakdown. And then is it a surprise that when it came up, just so that we don't get confused with the line? Okay, this little downward line here has more to do with the wedge, right? But as far as the parallel line that signify, let me change the color so that it's clearer. Sometimes when you use the same color, it's quite hard. Let's do a white. There you go. Okay, so you can see where the previous support was and where things start to have problems. See, so often if you are into a new chart, just as I am with this one, today was the very first time that I actually look back beyond 1 year on RCKT and draw up that channel that we just see here. And it was not a surprise to see how it lines up 1 year as well as going back 3 years. The magic of TA, right? So let's do this so that we see the channel. Let's change the color of this one here. So as you can see, if you use the channel trade instead of doing the wedges, you would have bought down here, sell up there as well, right? You don't need any kind of, it's often my chart, as you can tell if you follow my channel long enough, is already so busy, if not much more busier than this chart is. And this is barely 10 minutes into adding lines and trend lines and channel to the chart, right? So it can be super busy, but for me, by using channel, I already see. I don't need to draw the line to see it, but sure, the line helped me to know the exact level, but you can see it already, right? So I don't need to draw a downward wedge here to know that it's gonna, stop going down here. Nor do I need any kind of reason to not sell up there, right? Now we have a breakout here. Interesting, right? So this is a pretty clean breakout because you have the 1 week up, and then it's go. Okay, it didn't spend that much time testing. So you have a wedge, right? If you want to, you can use this as a wedge here. So from here to here, and then the bottom line can be here, here, up, right? So no doubt this is a break of a wedge right here, which also is a confluence of the 20 MA. Near that, right? And then of course you have this breakdown here. Where can this go? If you are doing chart reading, most likely right here. I mentioned this in the live stream a couple days ago. All right, and it's not a random spot. That's where I have a fairly large buy order, much bigger than what I have as far as what I start to buy at the 50 MA or just above the 50 MA, right? That was support. That was resistant right here, resistant right here, and boom. Okay, you get the breakout, the check back, go. So I start to nibble here. Next buy order, if you want 24.51 or 24.48 between there in that range, that's where a big order in, and then of course another order here, another order here, another order here, right? And then of course the biggest one that I have right now is of course the gap fill at 19.62. Okay, that's where I have the order that literally is a double down of all the share that I plan to buy between here all the way down to 20. And I have escalating buy orders, like very small up here, same size, bigger, 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 biggest. Okay, that's how I trying to scale into a position. And because I buy very small up here, I'm not really worried about a stop, right? At some point, it could be a stop. Like if I sense that this breakdown is too much as a strategy, would I then put a stop here and acquire everything down here? It's a possibility. It's all depend on the situation, right? Nothing is black and white. I always tell people it's depend on how things got there, how fast it got there, and what the reason it got there. If it's a general market dump, not worry. It's a sector specific, more thing that can be concerned with. If it's company specific, that's the most concern as far as a breakdown. But I like it here. I like the fact that it's definitely not overbought anymore, and I don't mind taking a small position right now. But back to the main point of this video, before I go off tangent, rambling about something completely not related. The key is, this is what I show you is the reason why I don't use rising wedge or falling wedge that often, because I can see it by just looking at channels, because lower low, higher low, all those things that you see, all the pattern that you see on the chart sometimes is within a well-defined channel. There's nothing wrong with drawing using wedges, and it's bottom line is, the more you use TA, the more you realize sometimes less is more. That's the key takeaway. Less is more. I don't need to look at a ton of different patterns to realize what is the most reliable pattern for me. For those that follow me for the past few years, you hear me talk often about channel high, channel low, where I like to make my entry and exit. It has been the most reliable pattern. Does not mean that it can't break out of the channel or break down of the channel. That's the point of serious consideration whenever there is a testing of either the upper band or the lower band. That is for this video. Thank you for watching. Bye-bye.